Hello everyone, I am Sora from Financial Advisor, and I hope you're doing well and staying safe. I talked about the power of compounding in today's video. Compounding is a powerful financial concept that allows investors to earn interest on both their principal investment and any interest earned in previous periods. The power of compounding is a fundamental concept in investing that can help individuals grow their wealth over time. Essentially, compounding means earning interest not just on the principal investment, but also on any interest earned in previous periods. When it comes to investing, the power of compounding can have a significant impact on an individual's long-term financial goals. By investing regularly and allowing their investments to compound over time, individuals can potentially grow their wealth at an exponential rate. For example, let's say an individual invests $10,000 in a stock that earns an average annual return of 8%. After the first year, their investment will have grown to $10,800, the original $10,000 plus 8% interest. However, if they leave their investment untouched for another year, the interest they earned in the first year will also start earning interest, resulting in a total investment value of $11,664 by the end of the second year. Over time, this compounding effect can cause an individual's investment to grow significantly. The key to taking advantage of the power of compounding is to start investing as early as possible and to remain invested for the long term. By investing regularly and allowing their investments to compound over time, individuals can potentially achieve their long-term financial goals, such as retirement, with greater ease. The power of compounding is further demonstrated by the following situations. 1. Saving for a down payment on a home. Let's say you want to buy a home in 10 years and need to save up a down payment of $50,000. If you start saving $500 per month now and earn an average annual return of 7%, your savings will grow to over $82,000 by the time you're ready to buy, thanks to the power of compounding. 2. Investing for college. If you want to save for your child's college education, starting early can help take advantage of compounding. For example, if you invest $200 per month in a tax-advantaged 529 college savings plan starting when your child is born and earn an average annual return of 6%, you could potentially have over $75,000 saved by the time your child is 18. 3. Retirement savings. The power of compounding can have a significant impact on your retirement savings. For example, if you start saving $500 per month at age 30 and earn an average annual return of 8%, you could potentially have over $1.2 million saved by the time you're 65. For paying off debt, compounding can also work against you when it comes to debt. For example, if you have a credit card balance of $5,000 with an interest rate of 18% and only make minimum payments, it could take you over 18 years to pay off the balance and cost you over $7,000 in interest. 5. Investing in the stock market. The stock market is a popular investment choice for taking advantage of the power of compounding. For example, if you invest $10,000 in a diversified stock portfolio that earns an average annual return of 10%, it could be worth over $67,000 in 20 years, thanks to the power of compounding. 6. Retirement savings. Imagine you start saving for retirement at age 25 and contribute $5,000 per year to a retirement account that earns an average annual return of 7%. By the time you retire at age 65, your retirement account will have grown to over $1.1 million, thanks to the power of compounding. 7. Credit card debt. Compounding also works in the opposite direction, causing credit card debt to grow rapidly if not paid off. For example, if you have a credit card balance of $5,000 with an annual interest rate of 20% and make minimum payments each month, it will take over 21 years to pay off and cost you over $14,000 in interest. 8. Investment growth. The longer you leave your investments untouched, the greater the power of compounding. For example, if you invest $10,000 in a stock that grows by an average of 10% per year, it will be worth over $67,000 in 20 years, thanks to the power of compounding. 9. Real estate investing. Real estate investors can also benefit from compounding. For example, if you buy a rental property for $200,000 that generates $10,000 per year in rental income and appreciates in value by an average of 3% per year, it could be worth over $490,000 in 20 years. 10 Education savings. Starting a college savings plan for your child early can take advantage of the power of compounding. For example, if you start saving $200 per month when your child is born and earn a 7% annual return, you could have over $75,000 saved by the time they turn 18. Here is a real-life scenario that demonstrates the power of compounding. Atul is a 25-year-old who decides to start investing $500 per month in a tax-advantaged retirement account that earns an average annual return of 8%. He plans to continue this investment for the next 40 years until he retires at age 65. Assuming Atul's investment returns an average annual return of 8% over the 40-year period, his initial investment of $500 per month will grow to over $1.1 million by the time he retires, thanks to the power of compounding. However, let's say Atul's friend, Pallavi, decides to wait until she is 35 years old to start investing the same amount in the same account. By the time she retires at age 65, assuming the same average annual return of 8%, Pallavi's investment will only grow to just over $425,000. As you can see, even though Pallavi invested the same amount per month for the same amount of time as Atul, starting 10 years later had a significant impact on the amount of money she was able to accumulate. This is because Atul's money had more time to compound, earning interest on both the principal investment and any previous interest earned, while Pallavi's money had less time to grow and compound. This scenario demonstrates the power of starting early and the importance of taking advantage of compounding when investing for long-term goals, such as retirement. It's important to note that while compounding can have a positive effect on an individual's investments, it's not a guarantee of future returns. It's important to do your research, diversify your investments, and seek professional financial advice when investing.